Hello and welcome to another of our short teaching videos. My name is George Dunn and I'm the Chief Executive of the Tenant Farmers Association. This teaching video is part of a series in which we seek to shine a spotlight on the topical issues being faced by tenant farmers and within the tenanted sector of agriculture more widely. It's part of a growing YouTube library which also features our webinars and news updates from the previous weeks. So don't forget to like and subscribe to our YouTube channel so you don't miss out on any of our new content as it is published. So today I'm delighted that we're going to hear from our expert rural surveyor, Adriana Vaux. She's an expert rural surveyor here at the TFA, and she'll be talking through some of the key points to consider when looking at statutory succession and the livelihood test. But before we start, I'd like to say that we are delighted that Roy Thorne Solicitors are sponsoring our 2024 virtual teaching sessions. For those of you who may not know Roy Thorne's is a national law firm steeped in agriculture. They have 90 years of experience in advising both tenant farmers and landlords and landowners, and their lawyers are active in farm tenancy policy groups, so they also see the bigger picture. So whether it's about a succession application under the Agricultural Holdings Act or a new farm business tenancy or a dispute with your landlord, a share farming agreement, a collaborative natural capital agreement, Roy Thorne's is there to act on your behalf and to assist. So today, moving on to the topic of conversation, it's on statutory succession and it's about the livelihood test and explaining that for you today. And this has been recorded in the spring of 2024, so everything that we cover today is correct at the time of recording. So for advice on any individual circumstances, we recommend you call TFA head office and ask to speak to one of our specialist team of advisors. So without further ado, let me introduce you now to Adriana, one of our specialist rural surveyors, and she's going to talk through statutory succession and the livelihood test explained. The floor is yours, Adriana.
Good afternoon, and thank you, George, for that introduction. As George explained, I'm here to teach to you today one of the most commonly asked topics, which is in relation to succession, the livelihood test. And the purpose of today's video is to give a helpful overview on this area of succession. So firstly, what is statutory succession? Well, often statutory succession causes a lot of confusion amongst people, with people assuming that it's just general succession planning, which is where, for example, the current tenant and the family are planning the future, which involves the hope that the next generation will take over the farm by agreement with the landlord on a farm business tenancy. Statutory succession is not simply a decision to try and get the next generation to take over the farm, but it is, however, a statutory provision for succession, which is contained within specific Agricultural Holdings Act 1986 tenancies. The process of statutory succession is very strict and must be complied with in order for succession to be able to occur. And more information of this can be found by accessing our website, which hosts a huge selection of helpful resources for our TFA members, or by contacting TF advisors on the head office number. So what is the livelihood test? This is one of the criteria which prospective applicants need to meet in order to be eligible for succession. This test means that the prospective successor needs to be paying for over half of their total household bills and living expenses from their work on the holding for 5 out of 7 years leading up to the date of death or the retirement of the current or previous tenant. And we often get asked, is it actually essential that prospective successors meet the livelihood criteria? Now, meeting the livelihood criteria is essential, no matter whether you wish to approach the landlord to negotiate succession or if you have to go through the formal process of tribunal. And the reason being is that either the landlord or tribunal want proof that you, as the potential successor, meet the criteria and are therefore eligible to succeed. And often we find that landlords, if you're negotiating just with the landlord, they often want to see far more proof and evidence than the tribunal actually do. So you'll always find that you will need to meet that criteria. Failure to meet that criteria can have significant implications, such as drastically reducing your ability to negotiate with the landlord or to secure the tenancy from your relative who you'd hope to succeed from. Next slide, please. So how can the TFA help you? We at the TFA understand how daunting the succession process can be for all those involved. And we, as advisors, are chartered rural surveyors who specialise in landlord and tenant law. We are advising members on succession most days of the week, so are therefore able to provide you with the most legally correct and up-to-date information. And we can do this by assessing your prospects of success, advising you of your position, and supporting you through the whole process with continued advice and support. Now, a lot of people get confused by what type of expenses they need to be thinking about and documenting. And these are living expenses. So this is everything you need to survive for you and your family. So, for example, this would be for either yourself or if you have a spouse and children who are dependent on you. These will need to be included in the following categories, such as rent or mortgage, your food, clothes, holidays, fuel, insurance, utility bills, children's clubs or school fees, costs for family pets, car insurance. Everything that the family needs to survive is classified as a living expense, and you need to be obtaining over half of those, so you'll be paying for over half of those from your work on holding. Next slide, please. So how do you actually go about calculating the livelihood test? Well, we know this is a very daunting and time-consuming task, which must be done in plenty of time. So allowing yourself plenty of time is really key to this. And that's why it's really important to start looking at this process well in advance of when you actually wish to succeed. So you'll need to go through 7 years worth of bank statements for either just the potential successor, but if you have a spouse, then you'll need to go through those bank statements, and those are the farm bank statements as well for 7 years. The purpose of this is to find all the payments which were for your living expenses, so you can add these up to find out exactly your total living expense total cost and how and where these are being paid from. The aim is for over half of your total cost to be paid for by the applicant through their work on holding. We often get asked, what if the farm pays for fuel, car, or is even given me a house? And these are all relevant and valid, and these are known as benefits in kind. Each one will require a realistic market value putting on them to contribute to your total living expenses, so we can know what values attributed those, and then we can put those in your preparations to see how much prospects of success you have when calculating your livelihood criteria. And then finally, we often get asked, what is the easiest way to work out the livelihood position? Through the TFA, through its many years' experience advising members on succession livelihood criteria, has created a specialist editable spreadsheet which is formulated to help applicants assess their prospects of success to show how ready for succession they are. TFA members can access this by contacting a TFA advisor who can also help you go through this whole process.
Adriana, thanks for that. That's really helpful stuff. So today we're talking about statutory succession, and we're talking about the topic of the livelihood test. And I just got a few questions to ask you to go a little bit deeper into this. Now, you've been talking about the what you earn from the holding. Now, I know that's shorthand for it's the holding or the bigger unit of which the holding forms part. But let's say I've got a job away from the farm, so it's off the holding, it's off the unit that we're farming, but I still help on the farm in my evenings and during my weekends. Does that mean I can still pass the livelihood test?
Thank you, George, for that question. And it's one that we get commonly asked. It depends is the short answer, in that it is all very well that you have a job off holding, but the key is whether you're getting paid for your work in the evenings and weekends. So if, for example, you had benefits in kinds and that added up to a fair amount. So, for example, if you're getting a house and car, the most important thing to see is, are you actually working enough hours during the evenings and weekends to make up the value for what you've been given. So are they a correct ratio? Because it would be unreasonable to think that if you're working just 2 hours at a weekend and a couple of hours in the week and you got a house, that wouldn't be a true reflection as to what the value was worth. So therefore you would struggle with the livelihood test. So in essence, it really depends on how much work you're actually doing, what you're doing, and what you're getting in return. So are you getting paid for those? So my advice would be that you need to sit down and document exactly how many hours and what you're doing and what reward you're getting, because if you're not getting any payment for that, that's not going to count towards your livelihood test. So this is when it's one of those situations where there's no blanket answer, yes or no. You have to really look at it on a case-by-case situation. So my advice is that members who are in this position should contact the TFA and speak to an advisor, and we can go through it with you and assess whether that would count towards your livelihood test.
So another question that often comes up, Adriana, so I'm a prospective successor tenant, and my spouse's income and my income all go into one account, and from there we pay for our bills. Does it matter that my spouse earns more than me in those circumstances?
Yes, that is a good question, and one which is commonly asked. And one would think that it wouldn't be so significant that if two pools of income were being put into one account and that account was paying for all of the living expenses, that it would be hard to differentiate. But actually, due to the invasive nature of succession, both a tribunal and a landlord will clearly see from bank statements obtained by both spouse and applicant that if a significant income was being achieved, and if the living expenses were such that the potential applicant couldn't meet over 50% of that, and therefore more than 50% was being paid for by the spouse's income, that would be very clear to the tribunal and landlord, and then that would jeopardize the potential applicant's living livelihood criteria. So yes, it would be a significant issue.
Okay, one last question for you, Adriana. So I don't do any of the farm work, and I'm a prospective applicant for succession. But what I do is I run one of the diversified businesses on the farm. Can that count towards my livelihood test?
So again, this is a commonly asked question, because nowadays it is quite common for diversified businesses to be very prominent in the agricultural industry. And I think the key here is that it can be if the diversified business had written consent from the landlord after 2006. So therefore, any time before that, October 2006, it wouldn't count towards the livelihood criteria, and therefore you couldn't use that to make up your eligibility for succession. But after that, if you have written consent, then it can be used towards the livelihood expenditure, the livelihood criteria. And also, if you don't have that consent, then our advice would be that you perhaps need to approach your landlord and ask for retrospective written consent, and this will enable you to start using that income towards your livelihood test.
Okay, huge thanks, Adriana, for that. We'll have to leave our questions there for today. But if you do have any more questions, if you're watching this video and you've got some individual issues that you need to discuss, then why don't you consider, if you're not already a member, joining the Tenant Farmers Association. So currently, membership is excellent value for money at just £249 per year. And that will give you access to dedicated advice, information, and support from experts like Adriana. And for more information about the TFA and how we can support you and all other farmers in England and Wales who don't own the land that they use for farming, why don't you go to our website, www.tfa.org.uk, and there you'll find information about our upcoming calendar of events, as well as our latest news affecting the sector. So we hope that you have found this teaching useful. It does form part of our growing YouTube library, and there are other teachings available for you to go and watch. So in the succession series, we've got a teaching on preparing for succession as a nominated relative of a retiring or deceased tenant. We've got one on the all of the eligibility tests for succession and what's changing and what has changed and what will be coming up for changes this year. And there's another one on the difference between tenants fixtures and tenants improvements and their treatment within farm business tenancies and AHA tenancies. So let us know in the comments below what you think of this teaching video. Don't forget to like and subscribe to our YouTube channel so that you don't miss out on any of the new content as it's published. So many thanks again to Roy Thorne Solicitors for sponsoring our virtual program of teach-ins for 2024. Thank you again to Adriana, and thank you for watching. Goodbye.